Hi guys, welcome to Investing with JYK, and today I will do a video on the tools that I use when researching. So first of all, it's Edgar. This is the URL, and you can search stuff with a ticker. So maybe you want to search. It works for things that's listed in non-OTC mostly. So if you search for, let's say, this guy, which is a Jiangsu Expressway, it's probably not going to show up. Yeah. So that's an OTC stock. So if you want to search for, let's say, LGIH, then a bunch of things will show up. Typically, I pay attention to 10Qs, 10Ks. Both 10Q is, whoops, never mind. So 10Q is the quarterly and 10K is the annual report. If you want to learn about a company, read its annual report first. They're typically extremely long, but be patient. And Def 14A is sometimes very interesting, but it's a proxy statement. So we don't really know what exactly they are. There are a bunch of things. In this case, it's like invitation to annual report. Sometimes there's merger acquisition I think that those get shown in Def 14A as well. But the most important is 10K. So you can read it there. The next thing I use is Seeking Alpha. Seeking Alpha is nice in the sense that there's information on others' thoughts. And also they would aggregate news for you for things in your portfolio that you have added yourself. And yeah, and then people talk about, there's actually, let's see, for example, I hold CCJ, and today just missed earnings. Probably it's going to go down a shit ton in terms of earnings. I mean, the price, but here people discuss, and you can read about it. Very often, they have a paywall. So they have a paywall for a lot of things. These are paywalled, and for some reason, if you use your phone, some of the paywalled stuff is still accessible. And it's also useful to just take a look at some simple metrics. For example, dividend yield, which is very often wrong, and market cap, and EPS, and PE, and stuff. And the other nice thing I like is earnings. Dividends. And you can look at dividend history, and then there will be some dividend history here, and payout ratio is also somewhat interesting. Financials basically is just statements. I don't exactly like this format because it's very confusing exactly what maps to what. Other than for super simple stuff, I would have to go to the actual statements. This is very unreliable. And yeah, so that's Seeking Alpha. It's very useful to keep yourself updated with your portfolio companies. Next one is StockRow. It's a fantastic thing. It's free and it has a shit ton of data. For example, you can see the charts, obviously, and then you can look at the actual financials, 10-year, which is fantastic. For some stupid reason, they put the newest at the end. I mean, who does that? Maybe I should do reverse column. Oh yeah, there we go. Maybe I'm the stupid one. Anyways, so you can use this, and then you have a graph. They do a graph for you, and all that nice things. And you can put it into Excel and do an analysis yourself. And you can do quarterly, annual, or just trailing 12 months. And obviously you had the 3 statements, and you got the metric, which is very interesting because now you have all the derived things like ROE, ROA, and ROIC, and all that stuff. Very cool. I especially like things like ROIC because I think that's the closest proxy, single number proxy that you have to the existence of an economic moat. And you have other things, but you have to learn each one of them. But it's free, and it has many years of data. Very useful. And yeah, and then you can also do a screener. The screener is very, very, very good for anything that's free, right? Because you have actually things like EV, EBITDA, and stuff like that. That's uncommon to find in many places. Yeah, you have EBIT growth and you have growth metrics and all that. It doesn't have that many choices, but it's very good. So that's that. And then Fidelity, I use that because mainly two things. One is the key stats for a particular company, and you have all the usual stuff, all the usual metrics, all these things. And you have some weird stuff like projected EPS growth for next year and next 5 years, which is like, exactly how do you get to that? Who made the projection? I don't know, but somewhat useful. And you can compare that. The most important thing is you can compare that to industry average. But you obviously have to understand what exactly you're looking at, right? Because this, for example, this guy I bought, I hold this company, but this company is a patent troll. It's not exactly a software company, so it's not that comparable, but as long as you know what you're looking at, this is very useful. So, for example, if you look at airlines, Delta or United or whatever, then you compare it against industry average, you would probably see that Delta does better than average and United does worse. I'm guessing. I haven't checked. And you got the margins. You can see this is software typically have very high margins. So this just by looking at this, you get a good sense of what the industry does, and I think that's very useful. The other thing I look at is the ownership and insiders. So that tells you what the insiders are doing. So ownership, I don't quite rely on this. It says the insider owns 12%, which is good. I mean, they're not going to screw themselves, hopefully. The thing that I watch the most is insider transactions. Are they selling or are they buying? If they're selling, it doesn't really tell you that much because they can sell for whatever reason. Maybe they just want money. Maybe they want to buy a Ferrari. Maybe they want to buy a house. Maybe they want to buy a yacht. Who knows? But if they're buying, they're typically just one reason. They want to make money. It's either that or they want control, but they will never get a control because typically these directors only have like 0.something%. So they can never afford to get control over that company. But yeah. And then there's obviously a difference between automatic sell and actual, manual sell. So that's different as well. So for this company, they've been consistently selling. They're just consistently selling, but it's only been public for not too long as far as I know. Let's see. Excuse me. They actually been public quite a while. Sorry, I'm wrong. But yeah, it's a patent troll. And this one I use for Japanese stocks. It's a screener for Japanese stocks. You can use translation to use this website. I think you can do it here. Translate. Yeah, Google does a pretty good job. So that kind of works. And for Chinese and Hong Kong stock, I use this website, which I've talked about before. It's Li Xingren, and it's very good. You can, you have the the screener that you can save, and then you can look at your screener over and over again, and hopefully it will show up. And then once it shows up, yeah, once it shows up, let's say I want, you know, some really cheap PB. Yeah, so some really cheap PB and maybe some good dividend. I don't know this company. So you open it up, and you have some valuation, historic valuation metrics. You can do all, and yeah, so that's also very useful in terms of finding how this company is valued in with regard to its history, and you can have all the other things like dividends and PS and all that stuff. And the next thing I'm going to show is Bloomberg. Bloomberg is useful for obscure securities. For example, this JS FCF thing is probably not going to show up in Seeking Alpha. See, it doesn't exist. Probably not going to show up in Stock Row. I doubt even more. Yeah, even this doesn't show up. OGZPY is actually Gazprom. It's pretty big. Even that doesn't show up. Right? For this guy, it actually does, which is surprising, but most of the data is messed up, I think. Yeah, has no data. But here, I remember it actually had some data. For example, it has a dividend at least. And it has balance sheets, revenue. Interesting stuff. So yeah, so that is the thing about Bloomberg. Has wider coverage, even though it doesn't give you as detailed data as you would get in either Fidelity or Stock Row or Seeking Alpha. So this is for some obscure stuff. And then Market Insider, for now, I find it good for bonds. This is a Sears Holdings bond that I bought at something like 92. It's maturing this year. I've talked about this. This one shows the price, and yeah. So I use this mostly for these. I think these are OTC bonds. I'm not entirely sure. Anyway, these. And then a couple other things like Fred. I've talked about this before. Fred is very useful for anything US related. You can look at different industries. You can look at things going back to like 60s. Let's see home ownership rate for United States. Show up. Yeah. Go. Hey, it goes up all the way to 60s. You can see the home ownership rate now is watch out the scale though, but this is like the same as 1980s. So do we have more space go up or down? I think more space go up. I think, which is why I bought LGIH. But this is one of the reasons, and you can also look at things like existing home sales, and this one doesn't go back that far, unfortunately. So some of the data isn't too long ago, but this one, rental vacancy rate. So you got what, 7% vacancy compared to 10%. But then if you look at the vacancy, it's not as low as 1980s. So yeah, so this one, if you look for unemployment, any macroeconomic things, plenty in Fred, very useful. And outside the US, I typically use trading economics. You can compare countries, and you can see how countries. You get a time series. You can do things like GDP growth rate. Well, this one isn't exactly, say, quarterly. Quarter over quarter, which is not usually how you look at it. So this is kind of stupid. But overall, it's still a fairly good tool. Annual growth rate, yes, that's what you're looking at. Right, you can see that from 1990s. That's a Tiananmen Square, I think. And after that, there was a credit boom, and there was a credit bust in the 1996-ish. And then here's 2008, and then there was a 4 trillion stimulus package, which went crazy, and then now it's kind of going down again. But it's still at 7%, so 6%, 7%, still very good. You can do that. And it has more than that. It has unemployment rate, has things, you see, labor unemployment rate, stuff like that, price inflation index, different money metrics. You have trade metrics and debt. Remember I was talking about South Africa's external debt and stuff like that, and you know how much debt the government has and stuff like that. So one thing you have to be careful is I don't exactly trust 100% of what trading economics has, because what if the country's lying, right? So trading economics is not going to go in there and find the real answer, right? So the next thing is also macro related, is OECD.org. There's OECD.org data, and then if you go there, you can find data, more in-depth data than trading economics for OECD countries. For example, like insurance penetration rate or something like that. Right? Very obscure stuff. You can find it here. So I use that mostly to see how people behave when they get more money. So then you can now as long as you know if a country's average income is going up, if you know that, then you can kind of predict their behavior to a degree. Obviously, you want to consider the like geographics, population, culture, and all that. So China might be much more similar to Japan than US, simply because the population density, the culture, the climate, and all that stuff. And 2 more that I missed. Whoops. LME, very useful stuff. You can look at couple of things. Obviously, you can look at price graph, and you can do something like 08, and then I would just show you, price graph since 08 for nickel. I'm long nickel. Just for disclosure, I guess. The other thing is the price curve. So different things have different price curves. The current month has a particular price, basically cash, particular price, and then you have going further out in the dates, then they have different prices. This tells you how tight or loose the supply is. So let's say if we find something that's not particularly. Oh, by the way, LME is London Metal Exchange. So let's see if I go to something that is. You can see here you don't have. First of all, the bid-ask spread is very large, and also you don't have a curve. And if you go to steel, you can see the curve actually goes down. What that means is there is a shortage of supply at the current supply, slight shortage compared to future. So the future supply is more abundant. And if you look at copper, you can see the future supply is more constrained. At least the market thinks that the future supply is more constrained than what is now. So that's LME, and the other one is Index Mundi. Index Mundi is useful for different commodity prices. For example, I am long potash. This thing has been messed up so badly since 2008. It's gone from $900 down to $200. Like, yeah. Anyone survives this price drop, it hopefully will do well. I'm long Mosaic. I used to be long Intrepid Potash when it was almost going bankrupt. Then it went from like $1, and then they did an equity offering and people bought in, so it wasn't going bankrupt, and the thing went to like $4. Then I'm like, done with this. But yeah, so potash is one thing, and you can do some weird stuff like salmon, and you can look at price for salmon, but sometimes they don't have it. Sugar, right? You can look at sugar price, and the reason you want to look at price is for commodities. If the price is below production for a while, it doesn't have to be too long, just like a year or two. The producers get super messed up. They basically, some of them go bankrupt. If it's individual farmers, they choose to farm different things, and you invariably get a shortage of some sort. And the other interesting thing is that commodities, for some reason, all seem to be fairly correlated. If you look at, let's say, I'm currently looking at, some grain. Grain's been cheap for quite a few years. So wheat seems all right, and then if you look at the other one, I don't really want to barley. Corn. Yeah, corn is the one thing I'm still trying to figure out is how to trade this. I don't really want to buy DBA, which is the ETF for commodity, like grain commodity futures. I don't really want to buy that because there's a roll cost. I also can't find any like commodity corn growing like company. So that. But anyways, the point is, Index Mundi is a very good thing to check for commodity prices, and and you can look at things like fuel. Clearly, fuel is a lot more important than things like livestock. We got cattle, and that's it. But man, on there, lots of things for fuel. Oh, by the way, you notice, right? These are very correlated. This shape. I don't exactly know why they are. I have some theories. I don't know if they are right, so I'm not going to share it yet. But yeah, so those are the tools that I generally use. Obviously, I use other tools as needed, but these are the things that over time I have come to rely. Another website is very good. Is YCharts, where you gotta pay. It's like $1,000, $2,000. I don't have the money. Even if I did, I do have the money. I just don't want to pay. I'm too poor and cheap. And that is all for today. See you next time. Thanks.